Hello everyone, this is Hassan from HDFX and let's talk about Euro-Japanese yen. Now if you remember that I did a video about fifth wave extension in this pair, and if it does look like a fifth wave extension, if it is, what this price has to do. Well, now in order for us to qualify this move as a fifth wave extension, we said that we should take um, a trend line that starts from here at the end of wave 3 and take 161.8 out of it and put it here, and it came somewhere like 125.2, let's say. But the market didn't quite come there. It came all the way to 124 and it rolled back. Now, in this situation, can we still consider this as a fifth wave extension? Now, what I've learned throughout the years is the fact that you cannot take every single rule uh, and you cannot use it to 100%. But of course, this actually comes with time to know which rules are so specific and cannot be changed, and there are some rules that you can maybe take it a little bit more easier. So, this is why in this video I want to talk about what would I do in this situation and how would I trade it since now that it is in the past. Now, market. When I did this analysis, I think market was somewhere around here, if I remember correctly. It's 122s or something, and the price started to go up. And now this is why I always say the price action is very key. Now, I know that I'm waiting for a market to come to me. So, usually what I do myself is I always divide my positions. So, in a way that I don't miss it, the trades, okay? So what I'm trying to say is something like this. I would suggest for you to try it what I'm gonna tell you in your demo accounts so that you have an idea of what's going on. So, what I like usually, if you, for example, trade, let's say, one lot, okay, instead of just waiting here for the price to come here and shorting one lot, why don't you divide this one lot into five pieces, five equal pieces of, for example, in this case, zero point 0.2. Of course, but I mean $200, and one lot is usually a standard lot is $1,000. So what I would do is if I see this price action not like starting to turn, as you can see, the bullish momentum stopped. Price made high, low, lower high, lower high, lower high. In this case, we understand that whatever this so-called fifth wave is about to not continue. It has lost its momentum. So what I would do, I would, for example, deploy one here, okay, and to see what's going on. If the price is still going to the to my area, I would add another one. I would add another one. I would add another one until I'm done with my one lot. Look, in this situation, market didn't come here. So this we didn't do. This trade we didn't take. This trade we didn't take. And this trade we didn't take. So what did I do? So from my normal one lot, I took only this much. Why? Because my idea was this, but okay, it is one of the rules, it's true, but it is a rule that can be a little bit forgiven maybe, because the main rule is to have a 1618 extension. Well, in this case, we have so much bigger than 1618 extension. So, and I would take a position of a short here. What was my target? Well, if you remember from the video, in a fifth wave extension, you need 61.8 target of the fifth wave. So what would I do? Well, let's say that fifth wave, so-called fifth wave, has ended somewhere around here. So what I would do, I would take my Fibonacci from the start of the end of fourth wave, start of fifth wave, and all the way back to here. So where's my 618? Well, the price couldn't make the 618, but it did break 2 to 4 trend line. Okay. Now, because it did break 2 to 4 trend line, and this is actually a place to take some of the shorts off. Actually, the first place I would take some off would be, it's the same. Why wait all the way? What I would do always, if you took a short here, your first target in this example, my first target will be to 1 to 3 trend line. So I would take, for example, 0.05 off here. Okay, so let's make it in a different color. So in this way, I did take some off here. Where is the second place? Could be, of course, it was going to be here, 2 to 4 trend line. Now, where would be the third one? Here. When would be the fourth one? Is exactly where this third wave was, and the fifth one would be here. Now, of course, if I wanted to take in 5 different places, this should have been a different math. So let's say like this, 4. But this is how to be safe on the market. Yes. Now, because that I couldn't deploy all my positions, I made less money. That's true. But if I waited all the way here, I couldn't even got this trade. So instead, I did get some here and here. So I took here and here, and what happened? Now you should still be on the trade with your stop being on break even because you already took 1 and 2. And if this time passes more and this place and this the market doing something like this, actually we don't need this, then you could close this position and you will still get some profit. And dividing your position size and dividing your the way to take profit is so cruel. In this crucial, not cruel. It's crucial in this market because you have to always. You cannot just expect in hourly chart or somewhere like this to market to um, market to make every single rule. Okay, if it's like this, then you cannot take any trade. So you should know the rules, you should know how to apply them, but you should be a little bit flexible on some of those rules. Okay, for example, what we say usually, well, the rule says on a zigzag, we need wave A. Let's say that this is wave A. I'm sorry, this is wave A, and the wave C here to be equal in time. True, but sometimes this one is 3 candles bigger, someone 2 candles shorter. This is acceptable. But if it's like this as a time difference, then I will not do it. But these are the stuff that you can always trade and you can be a little bit more careful about. Okay, so I hope this little bit educational thing helps you. So thank you so much. Have a nice day.